So the media is talking about the housing market again. And if you look back to the fourth quarter of last year, they said the same exact thing. The housing market is going to crash. Now, what we have to look at right now is what's going on in our economy. You know, the Fed has raised rates all year long, and they're pretty much done with raising rates. I mean, there's a lot of people that are predicting they will not raise rates again. This is called the pause. And if we look at next year, we are prepared for the Fed to cut rates at some point between the second and third quarter of the year. So the question you got to ask yourself is, how does that affect housing, and what are the things that we need to look out for? Well, first of all, inflation is still a problem. You know, the economy has not responded to the Fed like the Fed has hoped they would. You know, when we were in the pandemic, if you remember correctly, and we saw inflation, the Fed was saying it was transitory, which basically means it's going to be here today and gone tomorrow. And we know that that wasn't true. And I'm not trying to call the Fed out, but we have to be very careful with trusting what they say, because they're gambling with everybody's money right now. And where rates are today, it's starting to put some serious pressure on our financial system, specifically the banks. And we're definitely going to see continued reactions to what the Fed has done. And we're seeing it now. Credit card debt's at an all-time high. Interest rates on credit card debt hit 28% last week, the highest it's ever been in history. People are not taking car loans unless you're buying a house and you're not affected by rates. Mortgages are down. And those who have a less than 4% mortgage, who would like to fix their home up and who would like to possibly buy a new home, a lot of them are just staying put, and I don't blame them. And so what we have to look at is right now the economy is showing signs of weakness, and it's just getting started. And as we head into the end of this year, I believe those signs are going to become very apparent across the entire economy based on what we're seeing right now, and the lag effect, which is the reactions that come as a result of the Fed raising rates 6 to 12 months afterwards, because these things don't change overnight. It's just starting now. When the Fed is in a position to cut rates, which is usually when the economy is showing signs of weakness, this is when we have higher unemployment. This is when we see less consumer confidence and less spending. They're going to cut rates. And when that happens, you know, things are going to move very quickly. And there's a lot of experts that predict 2025 could be a pretty crazy year in the housing market. So for those of you that are thinking about buying a house, whether you're a first-time buyer or you have a home and you would be what we call a move-up buyer or a relocation buyer, I think it's important that you don't wait till the last minute to get prepared. You want to become educated on some of the new financing tools out there. For example, you can now finance in building an ADU or an accessory dwelling unit into many loan programs, which would give you additional value and income. This is brand new information that just came out in October. There's also some really amazing ways to finance in solar to your property that have not existed in previous years. It just started. There's also ways to finance in energy upgrades into your property. And so I think there's a couple things that's important for people to look at right now. And this is based on conversations I have every day in my office and with my friends for that matter. Number one, if you can save money with your energy through solar and energy upgrades, there's some great options available. You really need to look into it. Number two, you really want to think about underutilized income potential of any property that you purchase. It doesn't appear that we have a government that's going to open up regulation and let builders come in and replace properties through subdivisions and new developments. There's a little bit of that, but it does not look like that's what they want. Unfortunately, they want to see people utilize their property and build ADUs, which is kind of like a tiny house, which honestly isn't such a bad thing. In most of California, they're already doing this in Washington, and a lot of states are following suit. And then the last thing is this: if you're looking to invest in real estate, we're still seeing people find amazing opportunities to buy cash flowing properties. There's just simply less. So it's all about the purchase and the loan strategy. There are so many new loan programs available today for people to buy investment properties and to renovate some of the things that they don't have the cash for when they purchase those properties. These are some of the things that you want to look at. And then last but not least, credit card debt has hit an all-time high. A lot of my clients have, for whatever reason, they've accumulated a lot of credit card debt over the last year. People have things come up in life, and I get it. But it's at the point where it's really starting to choke people out. And the problem is, in any other market, when we have a 4 or a 5% interest rate, they would just do a refinance. Well, if you have a 4% or less rate right now, that doesn't look as attractive. There are solutions for this. We're showing people every day some simple ways to get out of that credit card debt. So if you need some help, If you're trying to figure out how to put yourself in the best position to navigate what's ahead, whatever that looks like, feel free to give me a call at the office. I truly hope that you and your family are doing well. Have a great Thanksgiving, and we'll see you next month.